And everybody, welcome to another edition of Your Money Radio. It is awesome to be with you. We're doing the show early this week, Stock Nerds and Market Lovers, for a number of reasons, but we're doing it early. And here's the thing: I'm laughing because I just caught a glimpse as our producer Zach says it's go time, and I look over. Danny flips a page of something I've sent him, and it's got nothing but highlighter marks on it. And so, as always, Stock Nerds and Market Lovers, I'm joined by, let's see here, Don Vandenbord of Kiss Animalize fame. I've got Hunter Mozingo, who looks like he should be in some kind of Friar Tuck type movie. Big Guns, Alex Guns from the Greek Islands.
Alex agree.
Big Guns, Big Guns. If you don't know what that is in reference to, please go like and subscribe to our YouTube channel, and you will see Alex taking you to the gun show. But and last but not least, as Bruce Springsteen would say, last but not least, Danny backtracking Stewart.
Backtracking.
We had Don. Would you label this morning's call as contentious?
It was humorous. I don't know about contentious. I'm used to Dan enough.
There you go.
So Dan, I presented Danny with something that I read, and I'm not a duty expert in it. That's why you read, right, Zach? You read to become educated, right?
Of course.
Yes. So I read it. And I'm like, Danny, I read this thing and I think it's interesting, and I want to talk about it with you. And Danny just like, where did you read that from? You could sense there was this. Where did you get this information from? And then he just jumped on as you're wrong high horse. Well, that writer
said the article was wrong.
He hadn't even read it. Like, I'm just describing it. And I'm like, well, maybe I'm leaving bits out. When I get to the office, I will show you the article. 20 minutes later, Danny, what part of I'll show you the article? I'm not defending it. I'm just saying, this is what I read. I think it's super interesting. So I get to the office, Don. I'm going to describe this for you, Stock Nerds and Market Lovers. I get to the office, and Danny goes, got that article? And I'm like, yeah, I got the article. Well, right here, they're wrong and wrong and wrong. And he's just like he's got the two wrong pens in his arm. Wrong and wrong and wrong and wrong and wrong. And I'm like, okay, well, it doesn't say anything that you're saying here, Danny. And then long explanations of why this is wrong. And I'm like, Danny, I didn't write the article. Like, I just am reporting that it's something really interesting I think that can help stock nerds and market lovers. Danny disappears. Then he comes back, Don, and he goes, well, I've called my third-party administrator. Turns out there is a super secret way you could do what this article is describing. And his paper is now...
It just never happens. It never happens. I said, how many plans do this? He goes, no, hardly any anymore. Hardly none. It's too much accounting.
But it's possible. And Danny is now officially backtracked. And this is like the Danny backtrack tracker. It is Danny
wow.
The Danny backtrack tracker is now officially up and moving. We'll get to this amazing retirement feat, stock nerds and market lovers, momentarily. But two things I want to cover because it's interesting.
It's very interesting.
That's David.
This is very rare.
That is right. Zach, is it too late to change Danny's name on the
damn genius?
To just DG. Damn genius. I wanted to introduce you as DG, and I went with Backtracker. DG. That reigns supreme.
They're my big guns.
I think we need to put a sign up.
Did you get it?
Ooh, probably.
Did you get it?
Yeah,
Thank
that's
you.
in there.
I missed it. What did he say?
I said they're my big guns. Woo!
Yeah. Oh my God. It's like
watch out on the flex and knock you over.
That was like going to the Albert Fudd gun show.
In the background, do we need a sign up that says number of days since Danny backtracked?
Yeah, I think we can do that.
I'm not backtracking. And look, here's the problem. Tim reads these two articles where they tease you. Here's two articles where they tease you about all these things that are possible, but they're 1 in 50,000 people do them.
So what good is it? Here's the problem.
It's possible.
Dan, we're allowing you to say that you backtrack instead of that you were wrong. Don't you want to accept backtrack?
Sure.
I was wrong. Like you can just. There's two guests I want on the show now. This guy who helped craft the article that we're going to read here in a moment, and your wife, AK. Because and then for the backtrack sign, I absolutely think if Zach can make a graphic, it's been 0 days without a backtracking incident, that'd be fantastic. And then, or Or like a Michelob or a Miller Lite sign that would be neon in the background, just damn genius in the background.
I like
Danny,
that.
of Danny's head. I'd get
cool.
that made. We could fit that for the show budget. So Stockers Mark Lovers, real quick. We'll get to Danny Damn Genius Stewart here in a moment. Gun show. Gun show Stewart.
That's right.
Yeah. But a lot has been talked about the 10-year bond yields, 2-year spread bond yields. So 10 and 2s, Danny. People like to throw around
10 and 2s.
10 and 2s. Not talking about driving, 10 and 2s. Talking about bonds and the spread and what it means. And you'll hear this term if you're paying attention to the Twitterverse or maybe television. People will throw this around as if you're supposed to know what the hell it means and what it infers. And I think the best part about the show is we do some nonsense to get you like excited a little bit about the show, but then we educate you. And we don't pretend to be so pompous that you know everything, because I sure as hell don't know everything. Danny, though. DG does.
Almost.
Getting closer. So I'm gonna literally read to you right here. I've got the 10-year Treasury yield spread up on a chart here. You can find this at ycharts.com. Real simple, dimple. You can see, though, it comes up to a peak here, and then it's arcing over. And what does that all mean? And you can right here find exactly what it all means to you. And so 10-year yield spread, the difference between the 10-year Treasury rate and the 2-year Treasury rate, a spread that's approaching zero can infer that a recession or a flattening curve is a recession is on the cusp here, or the cusp of a recession. A negative 10
or the Fed's just buying bonds.
No, it doesn't say that there, Danny. It says a negative 10-year 2 spread has historically been viewed as a precursor to a recessionary period. A negative 10-2 spread, a negative 10-2 spread has predicted every recession since 1955 to 2018, but has occurred 6 to 24 months before the recession. So, thus, a very far-leading indicator. There's some key words there. Far-leading. You can have a bat out of hell type rally in the markets before this occurs, right?
Mm-hmm. Yep.
But let's just be clear here. The 10-2 spread reached a high of 291 in 2011 and a low of negative 241 in 1980. A 10-year spread, a 10-year Treasury spread at 0.98 compared to 1.06 the previous market day, and 0.5% last year. Last year at this time, we're just figuring out that we're going to get all the stimulus in the world that we could ever want. And so the yield had not started to climb yet. This is higher than the long-term average of 0.93. So that's some critical information here. The long-term average of this spread is 0.93. We're currently at 0.98. So although the yield is drifting lower, are we on the cusp of recession? And I say this because there are a bunch of recessionary hawks out there. They want a recession, right? There's some doom and gloomers out there. Danny used to work with one. His name was Dan Kofal. I am not dragging Dan Kofal's name in the mud. May his soul rest in peace. But man, that guy was real negative. Like, I don't know how else to say it. And there are people out there that encapsulate the Kofal way of thinking, where the Fed can do no right. The market is going to hell in a handbasket. Stocks are overpriced. And they're looking for anything to give them a glimmer of hope that a recession is right around the corner. And this number has been bantied about the last 7 to 10 trading sessions. And I thought I'd provide a little fact-based thought behind it, and then, Danny, get your thoughts into what you think it's really signaling, and maybe Don has some thoughts as well.
Okay.
That's your turn to talk.
Well, again, so on those studies they did, I've read some of those studies before about the inverted yield curve. I can't remember what the time frame. They've got to stay inverted for how long?
It doesn't tell you.
Yeah, I think it's a couple of months or something. It's got to be a certain time period, because there have been times where it's just flipped very,
right.
day or two, and then it goes back and it's fine. But that is a pretty accurate description. And look, there's a couple things that could stimulate the economy with a lot, like if the stimulus bill gets passed by Congress and they start building and creating jobs and spending a lot of money, that's kind of bullish for the economy. I really don't think the money printing is that bullish for the economy, in that you can't really replace printing money with real growth. Now, you're going to have to, the trick here, I think, is switching and incentivizing people to go back to work, and somehow you're going to have to phase out the money they're getting to stay at home and not work, because without, like you said, without workers, you can't.
Well, I didn't say that yet. I'm going to.
I know, but we were talking about it this morning.
Yeah.
And you said, without workers, how do you have a recovery? You got to have people working.
Well, let's pause there, right there, right? And then we'll get Don's thoughts, because let's pretend that the yield curve comes down a little bit lower, markets struggle a little bit, and this Delta variant, which is highly transmissible, leads to maybe not governmental shutdowns and forced shutdowns, but what if we self-select socially distance? What if we self-select isolate, right? So the recovery is kind of put on hold, not because of any edict or dictum from on high. Dictum's a word, right, Don?
It is a word.
Sweetness. What if we just choose not to participate in sitting on airplanes en masse and sitting in movie theaters en masse and going to restaurants en masse? What if we choose to just recess a little bit back by ourselves and stay in our little family bubbles? And now we couple that without any more stimulus from Congress, any more direct payments. It's really hard. I mean, nobody knows how this is all going to turn out. But if people start to regress a little bit in terms of their enthusiasm for reopening the economy, it's hard to reopen the economy without workers, right? So if you stimulate the economy and you say, hey, we're going to keep feeding the beast, we're going to pass a program that allows you, I don't know that allows you to stay at home, but it's clear that there's not enough workers right now, and there is still some stimulus left in the economy until September 6th. If that's the cause, if that directly is a cause and effect, then then what if you extend that out to December? You can't continue to reopen this economy without people.
Right.
And then without people wanting to go out and participate in commerce, you can't reopen the economy either. And so it really is an interesting time frame. But while everyone ponders those types of questions, well, what are the yields really telling us? And 6 to 24 months is a huge amount of time where the entire world can change and flip upside down fiscally, monetarily, and just I think COVID has proven that, right? Like nobody would have predicted that, hey, if we get hit with this once in a lifetime pandemic, right, that this is how the Fed is going to behave. Like that playbook wasn't written before, was it? Like where was that published?
Oh yeah. Both the Fed and Congress, everybody.
Like the app, and so there's just a lot. Like, what's the appetite? Like, let's pretend that this Delta variant, or it's a different variant by the time the fall rolls around, that is a little bit stifling. What is the appetite politically to make funds available to airlines, to make funds available to businesses, to other businesses? And we talked about this a little bit last week, where the low interest rates that are still historically low, those low rates. And if you want we can look at them real quick. We'll go to, I think it's analyze. Yeah, I've got it here. So this is the 30-year Treasury on the screen right now. And so you can see the 30-year Treasury, which is what mortgages are based off of. The yield right now is 2.88, just as of yesterday. So these historically low rates, what they're and I know 30 years and typically you're using shorter time frames, but you're propping up a lot of zombie businesses right now that maybe aren't going to even get back on their feet if we had just a complete reopening right now, tomorrow. Like nothing to fear. COVID's gone forever. There's a bunch of businesses that just might not come back, and that's sad. I mean, there's no joy in there. And since 70% of the economy is small mom and pop businesses, small business, that's really hard because there's a lot of family businesses being wiped out. You're just going to be left with a bunch of conglomerates. But I think it's before people run up to CNBC or Bloomberg or your favorite doom and gloom newsletter or doom and gloom. Who's the guy on Twitter, Don. I forget his name.
North Star.
North Star. He's in England.
Sven, S-V-E-N.
He is just Sven
Heinrich.
Yeah, that's yeah.
Wow.
Northman Trader.
There we go. Yes. Hans and Franz's long lost cousin, Sven. I mean, that guy's just an uber bearish, right?
The world has ended 7 times now,
painful.
aren't you aware?
Yeah, and I think a little perspective here that the world probably isn't ending; it's just changing, and maybe these low rates are here forever. Maybe we're going to prop up zombie businesses with these low rates. Maybe that's just the way it is for the long haul here. But when I look at this yield spread, because I'm like, well, I want to know what this is the piece of information I was looking for when I went to go find this chart. Like you need some context, and so many people just throw out numbers without context. The average is 0.93 over time. We're higher than the average of this spread. That's a good thing.
Yeah.
That's not a bad thing. So we'll see how that develops over the course of the summer and into the fall. But at this moment, are we really heading to on the road to ruin? And I'm going to kind of say no. I think that you're going to have some normal shakeouts. I think the economy continues to reopen, and maybe, hopefully, the best course here is that we just reopen normally. Like the fall comes and we reopen and the world starts to get a little bit more back to the way it was every day that passes. So I think the worst thing that could happen is that we choose without edict that we self-isolate. Because if you self-isolate, what's the move to Congress? Like it was the fact that the government told you that we're shutting it down. Well, we told them to shut it down, so now we need to have a government program that funnels money into businesses and funnels money to people. But if we don't have that edict from on high, there's, in my opinion, there's no need for a government program because it's people on their own free will choosing to isolate. And now you're going to have this isolation, which will stunt the reopening without the propulsion of free money. And I think that's kind of what you're seeing here right now in the markets as it got a little jittery on Monday, a little bit recovery on Tuesday. We're going to talk about here in a second. But what is that? What does the economy look like without the stimulus? And Danny, you're probably going to say there's the government keeps buying these bonds and driving rates lower to keep this thing propped up. And maybe they're doing that because the direct stimulus to economy participants is going to end. No?
Possible.
Possible.
I just think they've embraced this printing money mantra, this MMT, modern monetary theory. And I think they're at a Hobson shore. They can't turn around and pull money. You can't because stimulus and monetary policy works both ways. If they suck money out of the economy, interest rates will go up quickly, and they can't have that.
You sent the most interesting stat over. Where did it go? Let me find it. Right here. And this you sent this over from Zero Hedge, and nobody labels Zero Hedge.
I don't normally look. I mean, they've got a few good articles, but a lot of it's scare tactics and hyper.
But they're citing Bank of America, so it's even though it's Zero Hedge that tweeted it out.
Yeah, they rehash good articles too.
So and this is from Bank of America. The Fed is spending $336 million every 60 minutes buying bonds. I'll read it again. The Fed is spending $336 million every 60 minutes buying bonds, while the U.S. government spends $875 million every hour this year.
Read that again. 800 and what?
Yeah. While the U.S. government, that could be defense, that could be subsidies for farmers, could be anything. While the U.S. government spends $875 million.
So almost $1 billion about $1 billion every hour and 10 minutes.
Going back to, let me be intellectually fair here. I don't know the context. I don't know what the government spent in 2012 or 2015 every hour. I don't know what they spent.
No, that's a lot more. I mean,
I don't know what they spent in 2002, but
now you're just arguing about semantics. I mean, the numbers are so big now you can't even.
This is amazing. This is an amazing amount of money. Can someone do the math for me? I should have did this before. Can someone do the math for me in bond buying in a 24-hour period? So what's 24 times 336? Anybody? That's a tremendous amount.
8,000.
8 billion.
4 times
8 billion.
8 billion, excuse me.
Every day we're buying $8 billion. The Fed is buying $8 billion of bonds.
Mm-hmm.
What happens if they just make
it? So that's what I'm saying. It's hard to argue. I mean, you could argue that it's real bond traders going, the economy is slowing, and therefore we're going to go buy bonds. But with the Fed buying that many, how would you even know what the real market's doing?
So the Fed could think about it. If I told you the Fed was buying $6 billion worth of bonds every day, that sounds like a lot, right? But it would be a decrease from $8 billion. And would that be enough to set off a taper tantrum?
Well, now you're talking about Congress talking about cutting spending. Well, you're slowing the rate of growth. You're cutting the rate of growth. You're still spending more.
Yeah.
You're just cutting the rate of growth.
I find it all interesting. And so, Don, not only is a portfolio manager, does all the investing here, runs the investing team. He also has a coffee stand. And so, Don, have people returned to the office park where the coffee shop is?
I am really an absentee owner of this coffee shop right now. Years ago, I turned it over. My son-in-law basically runs it.
Okay.
The answer is no.
Mm-hmm.
It's in a high-rise building. The largest tenant is still completely work from home. They've delayed 4 times when they're coming back to the office. So our tenant pool is down 60%, and therefore sales are down 60%. It's basically a zombie business right now, which is break-even business until the people come back to the building.
And now Apple Apple. It's kind of ridiculous what happened with Apple. Apple wanted their people to come back to the office, but they only wanted them for like 3 days a week. And there's a group of people out there that raised a ruckus, got a petition, and said we're not coming back to the office. And they got Apple to change their policy. Now you can say Apple's doing that for the Delta variant, right?
Well, that was the excuse, yeah.
Yeah, but the
worker has the upper hand in this market where employees are hard to find.
Yeah, that's exact. Don's nail, and that's why I'm bringing this up. Like you can't reopen the economy the way it was functioning without a return to some kind of normalcy. Like there's got to be thousands, tens of thousands of Don's anecdotal evidence there where the worker there's something in the New York Times this morning about food carts. They're suffering in New York because people aren't going back. And Don's right. It's the worker that has the upper hand. And by the way, like they're getting, we did this whole show last week. They're getting paid more. There's a reason why some of these stocks are rolling over probably. And I surmise that it's labor. If you want to go back and watch the show, just go to revereasset.com.
In Texas, we're fully open, but they can't. I mean, my daughter works at a restaurant, and they beg her to come to work on her days off because they can't find enough workers.
Yeah, and so. And this is a fully open state, and it's been one. I think Florida and here were the first 2, or maybe Georgia. Mm-hmm. Georgia might have been the first.
Arizona's been open for a while.
Yeah, this labor shortage is real, and there's people not going back to the traditional way of working. Like for every office worker, there's so many jobs that are created downstream, and a lot of these businesses are suffering. And it just seems like 6 of one, half of the,
I can make arguments both ways.
Yeah.
A robust recovery or, any big major political misstep, or the economy just simply slows because it is hard to get reopened without enough workers. It could go either way.
Yeah. So I don't. And so then the question is why you're here, Stockner. market lovers is, well, how does that affect me, Tim, and how does it affect the markets? Well, let's take a look here. Let's do a little diving in. So I showed you last week. By the way, I've referenced it twice. Let me just show you last week's show. So you go to revereasset.com, right? And then I want you to go to the podcast tab, and then I want you to hit the podcast tab. And all the information that I keep talking about is in last week's show. And I started, we had a sell-off on Friday, right? We had a pullback in markets. And I talk about when markets shift, I go to hourly charts and I explain the whole rationale. So still working the hourly charts, but now I've got the S&Ps up, right? So S&Ps, and this peaks here Friday morning at 8 a.m., this little high here. And I take it down to this low, and you can see the S&Ps have now climbed. So when they climbed above this 50% retracement this morning, like, oh, they're probably coming up here to this 618. Well, now they're trading in and around the 618. To say they're going up here to the 786 and the 4300 level, I don't know that. Right now, this is just a normal retrace. You're in that 43, we'll just call it 4313 area. And I would kind of think you're going to pause here. I don't know if you're going to go back to the lows. Not saying that at all. But this to me right now seems like a normal retrace of markets. And I don't think you're going to hell in a handbasket. But I think that right here, NASDAQ right back up to a 618 retracement. And the 618 retracement last week is where the NASDAQ failed and then reverted back down to these recent lows. To say it's going to happen again, I don't know. But I think the issues that are out here absolutely are going to play on the markets and the reopening stocks and what OPEC has done. OPEC doesn't know what's going to happen. Like, look at the price of oil. Let's go to a daily chart and think about this for a second. Since OPEC doesn't know what's going to happen, I think it was yesterday or the day before. Look at this move down in oil is because OPEC's going to increase production.
And if the COVID heats up a little bit and people start traveling a little bit, I mean, are the COVID stocks back in play and the travel stocks and the gas, whatever, pull them back?
Low oil is great for a bunch of companies. The airlines, the cars, like Ford only makes SUVs and trucks now, right? And so those, until we all get to coal generated electricity. I did that for Don. Did you like that, Don?
Thanks so much.
You're welcome. Until we get to that clean coal generated electricity. By the way, there are photos. I don't know where they are of Tesla. Tesla plug-in. Not plug-in generator. What do they call those? So you just EV chargers. Thank you. That are diesel powered. Like they're diesel powered generators. Like hooked up to the Tesla. Like there's a diesel powered generator.
Well, where do you think the electricity comes from? You either got to burn that gas, right, or possibly wind and kill the birds. I mean, nothing's
it's interesting. It's like a power source for a power source to your car, and so it's a bridge, Danny. We'll all be driving electric vehicles soon enough.
Yeah, pretty soon they'll be flying too.
That's scary, actually.
I agree.
It's way scary.
Yeah, and because the thing is, like our cities, like these flying taxis that they like the VSTOL, vertical takeoff and landing, like an MV-22 from the Marine Corps. The power lines, like we suck driving now on the roads.
Yeah,
can't imagine that in the sky. Like, right. Number one, number two, like just the buildings and the wires that are everywhere.
Right.
But I think they're going to be automated. There's not going to be pilots. It's all going to be like the Blue Origin rocket, right? It's going to be computers doing it.
Like, there are millions of traffic accidents every year in America, and that's on an X and Y axis. We don't even go up and down. Like, we don't have to deal with verticality. So now we're talking about introducing a Z
I like
axis.
that, verticality.
Well, I was just about to ask, is that a word? Don,
verticality is a word. It's really good.
I need to get a little bell on my desk here. Yes, I believe verticality is.
Oh, yeah, like a ding, like the iPhone ding.
Yep.
So because OPEC doesn't know what's going to happen, they're like, well, we bet while oil is still, when they did this, it was above 70. While oil is still above 70, we're going to just flood the market.
Cash in.
That's exactly it.
We need to ring the bell.
That is exactly it. They have to cash in. So now they're going to flood it, and now you've got oil trending lower, which is great for the consumer, but is it great for the economy? Is oil is great for the consumer, but it's thought that when you have this inflationary period where everything is expanding and everyone's building roads, they're building bridges, Danny, they're building homes. They can't get it. There's just not enough labor, right? And what is the Delta? This Delta variant. Interesting, by the way. Zach, you watch the Marvels?
The Marvels.
The Marvel movies. The Marvel show. Yeah. The word variant is in Loki, by the way. The best of the three kind of miniseries.
Yeah.
Variant is the word they use to describe Loki.
Yeah.
Anyone else do the Marvels? Danny, I don't think you do the Marvel shows.
No.
I like them. I haven't seen Loki, though.
Loki is better than WandaVision and much, much better than Falcon and the Snowman or Falcon and the Snowbird.
I haven't watched any of the spinoffs.
Yeah.
Oh, they are. This last one is so good.
Good. Loki's the best one.
Yeah. So good. But look at housing here. Like it's up 2 point. Here's DHI, just random picking DHI here. Up almost 2.75% today. But these aren't leaders right now, like Lennar. We could go ITB now, popping up above the 50-day here, but ITB. But go back to this chart, like the trend lower when we go to the 30-year treasuries, which is interest rates, has been. I mean, this has been just one big downtrend through 2020. Pops up, and now it's trending back lower, and there's still not this wave of refis. There's some real big constraints in this economy, and I don't know where it all fares out. And I'm curious, Don, what are the leading industry? What are you seeing as the leading sectors right now or emerging? I think it's more, in fact, emerging leaders because a lot of things have gotten destroyed. What do you see emerging right now?
Well, money last week while tech was pulling back, money flowed into staples, continued into real estate, and into utilities, but that's taken a pause with the bounce today. Their money those are lagging. Utilities and staples are lagging today, as what we're seeing is a bounce off of the 50-day for the S&P 500 and a bounce off of the 21-day for the NASDAQ 100. And that's the question is, are Monday's lows going to hold? That's really critical to the health of the overall market and where the market goes next.
And I'll tell you right now,
a lot of argument that this is a dead cat bounce, but yesterday, and Hunter made this point very clear in his videos, and we discussed it all day yesterday. While the markets were selling off, leaders were acting incredibly well. And while we downgraded short-term and intermediate term on the trend gauge, leaders stayed in an uptrend because of how they were acting, and they're following through today back to the upside, and that's very good from a market perspective.
And you're recouping all of the losses just about from yesterday, right? I mean, markets are up.
We're up, more than double yesterday's losses. We're up today.
And so when you're looking at these 2 days back in the middle of June, when it looked like the market wanted to roll over, it was the quad witching those 2 days in June. Right now, these 2 days in July look like that. Like I don't think that's undeniable that these 2 days.
That's a pretty good. Yeah, I'd say you're spot on there.
And so that's why I think a little perspective, like I think it would be healthy if the market flushed out
the weekend.
Well, and the week, but I think they've already been flushed too. Like,
I agree.
Yeah, if you look at where would the weekends be? And it's easy to pick on these stocks, but like an AMC, give me another meme stock.
Wish, WISH.
Thank you. Yeah, like even NVIDIA, which split today, it has. I mean, NVIDIA yesterday, I think it was up. Was it NVIDIA up on Friday or was it up on Monday? I can't remember.
Yesterday.
It was up
big.
Yesterday, down big on Friday.
Okay, so but that had even receded back 100 points, but before it was up yesterday, and like a lot of these stocks have already kind of corrected. Give me some more, fellas, that have just like Amazon.
Well, can I make a point?
Yeah.
Tim? So yesterday, I feel like we got that flush. Maybe I may be wrong. We may see another leg down, but CPC spiked up to like 1.2 in the morning and then closed above 1. I haven't seen that in a long time.
And Alex is talking about the put call ratio.
Yeah, the put call ratio, and the VIX, which is the volatility index, got up to 25, was up 30-something% yesterday. That to me was signaling on leaders that were holding buy. So yesterday here at Revere and myself, we were putting positions on it and ended up working out. And that's how you can measure your odds, is following stuff like that. And that Tim has brought up the put call ratio a lot as well.
Yeah, and what's interesting to me, let me show you this chart if I can find it. I'm down here at the bottom.
You also have the fear and greed index showing extreme fear with a 17 rating.
Yeah. Yep.
Oh, here it is. I already had it up. So what's interesting, Alex talked about the VIX. So I've got the cash VIX up here, the People's VIX. And
The People's VIX.
I call it the People's VIX because I talk in VIX futures often, and I don't think there's a good way. Like this isn't. Alex just mentioned like it was up 36% yesterday. I don't know what the level historically is that. Well, VIX gets to this level and it bounces. I think stimulus has thrown off the book. We've talked about this in prior shows. The book call ratio. I think it's thrown off the VIX. The VIX futures, by the way, did invert yesterday.
I didn't see that.
Yeah.
I was looking.
Yeah, they did. But
But
that last half hour where, and if you want to know something about the last half hour of trade, no matter, Central Time is 2:30 to 3, but Eastern Time be 4:30. 3:30 to 4. That last half hour to trade is often referred to as the ramp. And so, why do they call it the ramp? It's when passive money gets put to work. So think about all the Vanguard money, Betterment money, Wealthfront money, anything that's passive gets put to work typically that last half hour of trade. And so you combine the ramp, and there's two periods in a market day that stand out to me. 12:30 Central to 1 is typically one of the more bullish periods of the. You're good for like 5 to 7 S&P points on average. You can go back and look at that historically to the upside, and then the ramp. And the ramp doesn't have to start at 2:30. Okay, the ramp can start 2:45. They put the money on they're putting the money on the last possible moment. It's like 2:45, 2:50. And then you combine that with people closing out short positions for the day. That was a great rally. That was a great move off of 42, like 42.30 or something yesterday, right. 42.25. And by 4 o'clock Central, you're like at 42.60. That's a great move. Like that's a really nice move right off the bottom. And so you just got to understand where you are in time and space. I think market situational awareness is critical, but I don't think I ever get good market. I don't personally market situation, and I've looked every which way. So what I'm presenting to you is something that I have been able to use over time immemorial, is how to use the cash VIX, and I put standard Bollinger Bands on the VIX, and what I like to see is how the market behaves. So the bars down here. The purple and clear bars are the S&P 500, and the candles over here, the candles of the S&P 500. The bars, the green and red bars, are the VIX. So the VIX is the bars, the S&P 500 here, and you can see the price levels are the purple. And so when you usually, this is me anecdotally, historically, right? Because I want context, I get about 3 to 4 days of gyration in price at and around the upper Bollinger Band strikes. And you can see it's not always, it's not an absolute. You can see here you got like 2 days. Here you get that kind of 3 to 4 day window. And you see what price did there. Here you get about 3 days, and you can see what price did in S&Ps there. Here you got just 2 days, sharp drop. And this is 2 days now. This is just 2 days of kind of price movement up at the upper Bollinger Band. Just because I've witnessed over time, like you typically need this thing to work out 3 or 4 days. Maybe we shoot right back up. Maybe this is just like, let me just get rid of these marks and come back here. Maybe we are just like those last 2 days that we've done this in June. And right now it looks exactly like this right here to me. Looks exactly like this. And then you would anticipate a big move. And then someone will come out with but. Okay, well, what are the buts? What can I say to give bears some hope here? tech earnings, right? So you've got Netflix and who reports? I should know this. And who reports this week? It's
Tesla.
Netflix is tonight.
Netflix is tonight. Tesla is tomorrow, I believe, or Tesla's Thursday. When's Facebook and Amazon?
Thursday?
Amazon, Apple are pretty much like a week out, more or less.
Yeah.
Facebook, same thing, about a week.
Tonight
Tesla's
kicks
next
it off.
week also.
Okay, yeah. Tonight kicks it off for Netflix, and then next week we'll see. To say Netflix is going to move the market, that's not right, because they're not. Like they could miss. It doesn't mean Amazon's going to miss. It doesn't, or it doesn't even about missing. It's about the market interpretation of the report.
Right.
It's all that matters. Is
did
how
they beat by more than expectations?
Well, yeah. It's all about expectations and how does the market treat those expectations? Because the common refrain from, I think, newer stock nerds and market lovers is, "This was a great quarter. Why is price going lower?" Like that has got to be one of the most perplexing things to happen to a stock nerd who is betting on earnings, right? Whether they're betting on just they've got some shares that they held through the earnings report, or heaven forbid they carry their options through the earnings report. That really does become a crapshoot. And
you know what's funny about that, Tim?
Good.
Netflix, the last two earnings, the one they missed gapped up. The one they beat and crushed it gapped down.
Yeah, good luck. And Alex is at that. Guns Koutoudis over there with the
Guns Akimbo. Yeah.
Can we call him Guns Koutoudis in the show notes? Let's see.
Guns, how do you spell Koutoudis?
Koutoudis. Yeah, it's his last name.
K-O-U.
Oh, okay. Well,
K-O-U-T-O-U-D-I-S.
I thought that was one of your vocabulary.
Oh, look at Dan.
Yeah, baby.
Look at Dan.
He's
Let's
got
go,
it.
Dan.
We'll get Guns Koutoudis in the description of YouTube. And
I'm just stating the facts. I'm just reaffirming your point.
You're just firing bullets, Alex, and we'll see if this is clearly an apolitical. As much as sometimes Sandy wants it to be a political show, I clearly try to steer the ship apolitically because markets.
We need to help stock nerds
because exactly. But I wonder if by including in the show notes for YouTube. By the way, Alex, what should people do for our YouTube channel?
Yeah, go to YouTube, type in Revere Asset. You will find us, and make sure you like, share, and press that red subscribe button.
There you go, baby.
Yeah, Guns Koutoudis. Do we pick up some right wingers, or some of the folks,
yes,
or some of the folks that are going to abandon Black Rifle Coffee Company?
I'll start putting the word gun in our YouTube.
Yeah. Just put Guns Koutoudis.
Yeah, I'm sure the algorithm will work out real well with YouTube.
Yeah. Don't get us flagged.
I tell you what,
that's a good idea.
I want to see
don't get us flagged for it. I don't want the ATM selling up our door.
No. Guns Koutoudis. Like you've got your Beretta.
You're giving out financial advice and selling guns.
Yeah, Guns Koutoudis is a rapid fire stock model.
Yeah.
Like,
wow.
I'm shocked that the subscribe button is red.
That's true.
That's a good point.
I'm not giving Don an inch here. I'm not giving in to Tidy Whitey's Don.
I had somebody ask me about Pair of Thieves, though.
There you go.
Don's underwear of choice is Pair of Thieves, not Hanes or Fruit of the Loom. Which, by the way, I read.
Never wear another brand again.
Can somebody? I read that there's a reason why Fruit of the Loom is named Fruit of the Loom. It's not. There's if someone could just Google that for me. Like there was an interesting thing I read in the newspaper recently about the loom and thread. I'm like, oh my god, that's why they named the underwear Fruit of the Loom, but lost in the translation because all their commercials are just a bunch of grapes and apples dancing around with underwear. So, which I quite don't understand.
Oh, Tim.
Haven't you ever wondered why they called it Fruit of the Loom?
I can surmise.
Looking for answers.
So can I. Yeah. That's why I don't.
Give it to me. I want to hear. I want to hear the King Lear's summation.
Let's keep moving on.
No, I want to hear Hunter's summation. He's got me curious now, and then we'll move on to Danny.
Well, I mean, I don't necessarily have the greatest summary, but just from the fruit of the loom, you could interpret that it's keeping safe the fruit of your loom.
All right, I've got a Wikipedia.
That is not even. Oh, jeez, that was awful. This might be the first time mommy finds a little. She's like, "Was that my boy?"
Me mommy's going to be calling you tonight.
Me mommy is going to have
You're just going to be confused.
There's going to be a call. there's going to be a call to Schnookums and and talking about the packaging of his peanut. Go ahead.
Are you confusing loom with
Packaging of the
loins?
peanut.
I'm pretty sure he just did.
I think he is.
I'm not confusing. I mean, there's two of the same letters there. L.
They would call it fruit of the loin, not fruit of the loom.
Nobody would buy fruit of the loin.
You don't think
Fruit of the loin.
I'm fairly certain that there is a sect of our population that would run out and grab. They're buying pair of thieves.
Yeah.
Hunter, do you know what a loom
This
is?
show not sponsored by Pair of Thieves.
Not
They're
really.
not.
Yeah.
No, I don't.
Okay,
Hey.
a loom is an apparatus that makes fabric.
Yeah.
So they're making underwear, and the
Someone's
fruit
phone's going off.
coming from the apparatus is the best underwear ever.
Is that
Okay.
what you
Oh,
guys?
yes,
so-
Don, that's
all
much
right,
better.
All right. So Wikipedia tells me Robert Knight, the founder of Fruit of the Loom out in Rhode Island of all places, said that he liked the name Fruit of the Loom because it referred to clothes, paralleling the phrase fruit of the womb, meaning children, which is traced back to the Bible, specifically Psalm 127:3. So that's
Whoa,
what it is.
there you go,
It's
baby.
paralleling a Bible for a statement. That's what I've got from
Really?
Wikipedia.
So
This guy took
Hunter's explanation was much closer than
I think
John's.
so.
They got underwear to Bible.
The
Apparently.
loom had nothing to do with it.
Yeah.
Really?
Those would be loin
Loom had
cloths
everything
in
to
the
do with
Bible.
it because it rhymes with womb and it produces clothing. Damn.
Yeah.
Okay. Okay.
It
Do you have
makes
to
stuff.
backtrack it twice in a single episode now?
Okay.
Oh no!
Light up the sign.
Oh.
And here we go.
Shots fired.
And now let's. Speaking of Alex Guns Koutoudis firing all those bullets, shots fired indeed. Let's now go to Danny Backtracks on the next segment of the show.
There you go.
So this article I've got on your screen, Stock Nerds and Market Lovers, you can find it in the Wall Street Journal. Little known backdoor trick for boosting your Roth contributions. I read this and I'm like, wow, this is pretty interesting. So a couple weeks ago, there was a story out that Peter Thiel has a gazillion dollars in his Roth. And with the limits, Danny, what are the normal Roth contribution limits?
On
Just a regular
IRA, Roth IRA,
Roth IRA.
6,000 or 7 if you're over 50.
Yeah, and right here, Peter Thiel has $5 billion. And it's like, whoa. And so there's a lot of thought you could say, how did ProPublica, which releases, how they get this information? We are losing a lot of individual privacy issues. There's a lot of privacy issues right now in society, right?
Yep.
With tax returns being released and who leaked this Peter Thiel thing. And
I think they may be setting up a thing to go after the Roth's money later.
well,
Taxes.
when Dan, let me just translate. I'm a good Dan translator. When he says they mean Congress. When they say going after, he means they're going to take away the tax provisions. And when he says
No, they'll just tax it when you take it out.
when he talks like that, he means they're going to screw you, stock nerds and market lovers.
That's it. That's exactly right.
He's looking out for you.
No better Dan interpreter than me over here right now. So ProPublica tells you what's going on over here, okay? But here's the thing: most people will never. So Peter Thiel, at pennies on the dollar, was able to put PayPal stock into his Roth IRA, and then some Facebook. He turned that stock into Facebook stock or a Facebook investment, and that's how you get from only $5,000 or $6,000 allowed per year to a gazillion. Okay, so but most people will never get a chance to do pre-IPO stock. There you go. So here is the thing. But the mega backdoor Roth conversion strategy is available to many people with 401k accounts. So as long as they have the means to save significant amounts of money, it lets those in 401k plans that allow after-tax contributions up to $58,000 a year into a 401k account, and convert all of the money into a Roth IRA with minimal tax if executed well. Look, I'm going to leave this on your screen, stock nerds. If you can't find it, I'm just going to scroll the article for a second. You pause so you can read, and then when you come back, it'll still be scrolling. You can pause and read, and pause and read, and pause and read, and then I'm going to surmise the article. Remember, you stock nerds, before you yell at me and send me your thoughts about things about Tim, I can't find the article. Pause and read, folks. Pause and read. Here we go. Can you get a shot of Danny turning towards me to
Oh,
just
yes.
blast me the
You're not
moment
going to
I
read
start
that whole
reading?
article, are you?
No, Danny, I'm going to read the parts. This is the thing. You can't see it. I work in number 2 pencil because I am fallible and I find myself erasing a lot of my life.
Okay.
Right.
Somebody's phone is vibrating on the desk. I could hear it.
Yeah,
Oh,
no.
do you hear
Hey,
that?
hey, Alex.
Is that Danny's
That's
phone?
not very good for
That's Danny.
upstairs Pennsylvania radio.
Connecticut. The
There we
Connecticut
go.
School of
Connecticut,
Broadcasting
whatever.
upstairs.
Whatever.
Jesus. Not only are you
Upstairs
backtracking to that,
Pennsylvania radio.
you're just geographically challenged.
Danny might have stumbled
One of
on
those
the episode
Northeast
title this
states.
week.
Yeah, Pennsylvania.
They're not
whatever.
Texas. They're all the same to me. It's
Yeah, it's all
They all
We're
fit, they all
really-
fit in South
we're
Texas.
really just one state and an amalgamation of territories. Texas and everything else. Holy hell! And
Tim, you're on a roll today, Tim.
well, man, I got to tell you what. I had to deal with this on the phone call. Like Danny, would
It
you
is
listen?
so true.
Hey, you just read something though in that article. That article
I'm a-
is false.
It's Jesus. And so I highlighted where Danny should read, and then Danny just jumps through the little. I'm just going to read you the parts that I highlighted, which
Okay.
isn't much.
All right, go ahead.
It's okay. So here you go. The mega backdoor Roth conversion strategy is available to many people with 401k accounts. So as long as they have the means to save significant amounts of money, it lets those in 401k plans that allow after-tax contributions put up to $58,000 a year in a 401k account and convert some or all of that money to a Roth with a minimal tax hit if executed well.
The all is false, but go ahead. Go ahead.
This vastly outstrips the $6,000 most people are permitted per year. You know the limitations, stock nerds and market lovers. Here's the strategy. In order to take advantage of the mega strategy, you have to work for a company that lets employees make after-tax contributions to its 401k plan. According to a survey of 263 employer-sponsored retirement plans by a 401k record keeper, All Right Solutions, which counts many of the Fortune 500 companies as their clients, half or about half offer the ability to do what I just read.
No, to do Roths, not those after tax.
Roth
Re-
401k.
Roth 401k.
About to offer,
which is after
hold
tax.
on,
Okay, go ahead,
you
go ahead.
got to be quiet here because
Go ahead.
Okay, your desire to be right here is going to be
Go ahead.
trumped.
Go ahead. No, it's not. Go ahead.
Couldn't let the joke sit. Its clients,
I'm good with that.
about half offer the option to make after-tax contributions. Vanguard Group says about 40% of the 4.7 million participants in its 401k plans have access to after-tax savings. Of those, 10% have only chose to do so. Fidelity Investments says more than 90% of the 19.5 million participants in its 401k plans that it administers are eligible to make after-tax contributions. I'm fast forwarding through the article. Stockers, if you want this article, you can more than welcome to have it. To get to the $58,000 annual 401k contribution limit, a worker who has already funneled $19,500 into a pre-tax or a Roth account can then make an additional after-tax contribution to the 401k as much as $38,500. The strategy is most effective when an employee can withdraw his or her after-tax contributions soon after making them. And then it goes on. So there's the article in the journal that outlines how you can expand with after-tax contributions. And I don't think this appeared. There it is. What to do. This is the Fidelity. I think this is where the art. By the way, this was written.
It is.
This is written 1/29/2001, and I believe that the basis of this article from the journal comes from this Fidelity think piece from the beginning of the year. I think I've traced them back. Okay. Danny now has a bunch of things to say, and by the way, I'm going to scroll. Again, stock nerds, you can pause or you can email me. Let me just show you where to email. You can email tim@revereasset.com or call 855-732-5932. You can email any of the guys here. We all have the same information. They will send it to you if you want it. Like if you look at Guns Koutoudis here, you're like, I want Guns to email me. Can we change his name? Or add like a
Wow.
If you want Alex to send it to you, he will. If you want Hunter to send it to you, he will. They both have the links. Okay, everybody has the links. Here is the genesis, or the Phil Collins of this article in the journal. Okay, now I will let Danny explain.
Put that back on, Zach. Zach, can you put that back?
Oh,
on?
I'm sorry.
Got it.
So
Scroll down.
Yep.
Okay.
This is the genesis. And by the way, when you hover over some of the numbers, they in the live link article from Fidelity, they're giving you, here's an example. Like they're telling you what they're doing and how they came to these calculations. And now, Danny, I will turn it all over to you because, by the way, if this is just as clear as the journal article makes it out to be, there's a really big financial gain to be made by stock turns and market levels. Like you can make all these contributions, and someone Alex's age and Hunter's age, they make significant changes in their life as they get older. So I
the important thing is that 58,000 limit, that is only if your employer is contributing a massive amount over and above the 19 that you're allowed to contribute.
Well, no.
Correct?
So
I think no.
So hang on. The reason I don't like those two articles is they're very misleading. Now, the percentages you read, the 40% and 60% allowed, they're saying after-tax contributions, they're counting the Roth. If you get to do a Roth 401k on elective employee deferrals, they're counting that also as after-tax. So the rules are such that an employee can defer $19,500 under 50 or $26,500 over 50. There's a catch-up provision, whether it's 401k or Roth 401k, if your company even allows a Roth 401k. Okay, those are your elective deferrals. Then, Don, like you were saying, the employer can put up to $38,000 to get to in the high 50s or even mid 60s if you're over 50. Now, there is a special plan though. They call it, and hardly any employers do it anymore. Hang on. It's called the workplace savings plan. So basically, there is a provision that allows for 401ks if the employer is not maxing out or doing a big match or even matching. They can actually set up a side account where you can put in extra tax dollars over and above your employee deferral to get to those maximums that are normally done by the employer profit sharing or matching or safe harbor matching. So here are the problems with that. And that's why I said that article is actually factually wrong, where it says all of the contributions. Okay, so you need a separate side account. And that's after tax, so you pay tax on it, before you put it in. Then you can max out and get that $58,000. But the extra on that, okay, you've got to separate it. You've got to keep it segregated so that the principal portion, the amount you contributed, later could be rolled into a Roth, and the growth portion will be rolled into a regular IRA. So the growth portion would be turned into ordinary income, not capital gains, but ordinary income. And you've already paid tax on it because you get on the contributions because you didn't get the deduction. So that's the first thing. So there is a special circumstance where if the plan allows it, which virtually no plans allow this, that's the problem with that article. It makes it sound like everybody can do it. I even called the third-party administrator of our own plan, and he said, yes. So I said, this article's saying this, and I haven't heard that. He goes, yeah, that's because nobody does it anymore. He said they're costly, the accounting is expensive, and you don't get a lot of participation except for the very high earning workers, and so it's very, very rare you see that anymore.
There's a gentleman in here mentioned. Mm-hmm. I do think that this is a good topic. Okay?
Oh, no, it is. And for closely held businesses or for a small group employees, like a small company, it's a great idea.
So this is my problem with. So this is what when I was reading this, look, I don't know if this is fake news. I don't think this falls in the fake news thing, but there's clearly more to the story than what's written in the journal article.
Oh yeah, they're trying to lead you to get you to reach out to them and get clarification. And yeah.
Well, no, there's a source in this article,
right,
that I specifically didn't mention his name,
right,
because
I know who he is,
right, because I want Danny to call this person and ask him, and not.
Oh, I'd be happy to.
Yeah, because I want to get to the bottom of this, because this savings that you're allowed to,
if the plan allows.
and that you see, in my problem with what Danny was saying on the phone, I'm like, Danny, the article says X, and I'll read it again for you, and this is why I want to get to the bottom of this, and I'm not saying Danny's wrong. I want to be really clear, but it is written in a confusing manner to me.
Absolutely,
that I now.
They're mixing terminology.
And I want to know, so Vanguard Group, so Danny's saying nobody does this. I'm like, Danny, Vanguard Group is saying 40% of the, almost half of the 4.7 million participants, and by the way, I thought there'd be more Vanguard accounts than 4.7 million, but that's another. 4.7 million participants in its 401k plans have access to after-tax savings.
Now, stop. There's after-tax savings includes a Roth 401k component that you could put up that $18,000 in. See, it's the extra plan on top of that that if they add it on, you could put in an extra amount that also would be after tax. They're talking about, when they say after tax, they're saying you got a Roth 401k. And then, not the extra part.
And then Fidelity Investments says that more than 90% of its almost 20 million participants in the 401k plans it administers are eligible to make after-tax contributions.
Roth elective deferrals that are the $18,000. The part from 18 to 58, hardly any plans do that.
That is not. If that
is the case, absolutely. I called.
Yeah, no, I'm not.
Yeah,
because that's not what this.
Because most companies, instead of doing that, they'll do a company match, like a 3% safe harbor, and then an additional profit sharing layer to kind of entice people to participate, and they get a tax deduction for it. Which, by the way, also doesn't go on the Roth, because a company is not going to make an after-tax contribution for you or the employee. For me, it's going to be deductible. So only your deferral is really the Roth portion.
Two thoughts. The first thought is, this is a great, and you alluded to this, but I want to parse it out a little bit more. This is a great plan for small business.
Oh, absolutely.
If you are a small business and it's, Danny said, a limited number of employees, this is a way small business owners, and we do have a bunch of small business owners that listen to the show, and this is a great idea for you.
Absolutely. And by the way, the company match and profit sharing may also be a great way for the company. It depends on the demographics, how many employees you have, how many owners you have. It depends. But either one of these are optional. It gets more and more expensive the more employees you have, and because the accounting.
But I think if you're a small business owner out there and you just heard these words and your interest is piqued, I think a call to Danny is absolutely in order, because this is a way for you to really maximize.
Oh yeah.
This little hidden nugget here is and by the way, 70% of the economy is small biz.
And by the way, if you get a good customized plan, you can do individual stocks. Our plan allows options. We can do options in our plan. Okay, ETFs, you don't have to put up with
taking extra money,
12
and stuffing it in there to grow tax free. Yeah. Absolutely huge, and I think it's a great idea. Now, my other thought now is for bigger business, like where there's a huge competition for workers, and tech comes to mind right away. But I know every business is competing. I don't think this is explainable to everyone. I don't think this is explainable. I'm confused, right? And I'm not, just because I'm confused doesn't mean that's the barometer for anything. I'm just saying that this is a difficult thing.
It is very difficult.
And you got to go back. The stat's a little old, where only half, like 52% of Americans participate in the stock market.
Mhm.
Like that when people talk about the have and have not economies, like we talked about this last week a little bit. The way to wealth in our country is ownership, whether it's ownership of a home or ownership of a business or ownership typically, or ownership in stock, ownership of companies. And so stock is one way to do that. And most of just a little over half do that in this country. And of that half, the majority is in 401k.
That's what I was going to,
because you're automatically enrolled. And the reason why you're automatically enrolled is that's how the Fidelities of the world make their money. They take money right from your paycheck. You have to actively go in and cancel it. They tell you, you don't want to do that. You don't want to do that. It's your money, but you can go do it. They have to have you automatically enrolled so they can try to keep some of the fees low. And by the way, Fidelity makes a blank ton of fees by having you automatically enroll because they put you in these incestuous funds, and it's a whole nother show and a whole nother topic.
They all do it.
But this is really interesting because most people aren't going to get 99.99% repeating. They're not going to get to Peter Thiel levels. You're not going to get to.
Well, he's one of the greatest private equity investors of all time.
Right. But there's others. I think ProPublica just got fed Peter Thiel's, and a lot of this probably has to do with Peter Thiel's affiliation politically.
Yeah.
But Rebois probably is going to have I think there's people being targeted here.
Absolutely.
The right to privacy is just.
Yeah.
People should be more upset about the right to privacy issues because if this is happening at a grand scale, where did this get released from? I mean we're not a privacy show because I don't think we can help anybody in that regard. Like I don't think we can tell people what to do. Just get some Norton anti-theft stuff and you'll be fine. Who's the McAfee?
He was. He's not is. He died last
why
week.
would McAfee never change their name from McAfee Antivirus to constantly be associated with John McAfee? And all those years, those subsequent years where
it's got to be the install base. They sold so many copies of McAfee Antivirus to people over 50 out of Best Buy that were buying computers and had no idea what they were doing. That at some point they were like, if we change the name, people are going to get confused. I mean, that's my only explanation.
Is that it?
That's all I got.
Because my dad asked me about PC-Matic when I went home, and I'm like, "You're watching Fox News again, aren't you?" I think it's the My Pillow guy and PC-Matic are the only advertisers that are on Fox News.
They're the big ones for sure.
Like every other commercial, when I'm
that's their demographic, man.
When I don't think anyone else buys Time, but Pillow Dude and PC-Matic, and the PC-Matic guy just scares the blank out of you. That there's hackers. I'm like, Dad, there's like no one around us. Like they're not getting your Wi-Fi signal. And what sites are you going to?
Yeah, what do you got to hide, Dad?
let's talk about your sites, Dad.
Well, I think it's my mom and the pornography. I think that's I'm fairly certain that's what it is. And so it's not him. He's concerned for her. Once showed my dad. I went home and I got him set up on the Amazon Cube, the Fire, and you can speak into it.
Yeah.
And I'm like, watch this, Dad. And I just shout into the thing, boobs. And he's like, we get these shows? And I'm like,
it's like magic.
I know. I'm like, it's magic, right?
It's amazing.
I'm so glad I didn't have the internet growing up as a teenager.
How could you imagine?
Oh, it would be awful. Never would have came up from
now you're trying to secure it, lock it down with all those kids.
That's right.
Oh yeah. Yeah. Like
right, now you're on the other side of it. You're policing.
Yeah. I'm like, these kids, man, they have it so good. Anyway, I digress. I don't think that we've solved this yet. Like, I don't think the discussion is over with this article and how to put money in it. I know I want to be more clear and systematic of how people can take advantage of this plan. And I want to be able to talk more through the roadblocks.
Well, every single plan is guided by its own documents and its own whatever. So it doesn't matter what that article says. Is your plan allowed or not? Period. Well, if you can't even do a Roth IRA, a Roth 401k,
right.
You can't put any text.
Right. So I want, if Danny can find the time next week or this week to call the person that he's the one talking about it, evangelizing this strategy. If you can call that person and just,
Well, if you read the article, he said if your plan allows it. He does make the disclaimer.
right, if your plan allows it, but because the way, and her name is Ann Tegreesen, I believe that's how you pronounce her last name, Ann Tegreesen. The way the journalist makes it sound,
It's popular.
it's popular and it
just
sounds easy.
Yes, it's the 401k, the Roth 401k employee deferrals is popular, not the extra savings plan by the employee. I can check.
Yeah,
I
I think that we want to do more into this because this
I called a third-party administrator that administrates 401k plans all across the country, thousands of them.
I know, but
this guy knows them by heart.
I'm rarely cynical, and because there's an old saying out there, Danny, that pessimists get to be right, but optimists get to make money, and so I'm rarely cynical, but.
He's actually sending me a deck sheet with all the different plans.
I wanted that'd be great, but we've encountered numerous customer service reps in the industry that we work in that don't there's a lot.
That's why I called to verify.
Yeah, there's a lot to know, but not everyone customer service agent knows everything.
Yeah, absolutely.
And so the source that's in the article I know is available. You can call it. Have a chat with him.
This guy's actually an actuarial wonk. He's not a customer service guy.
No, I know. That's what I'm saying. Like, I think I want you to call him and then take some notes and go, this is what he said, and then we'll hash it out from there. Because that is like, if you're a diligent saver, like you understand what's going on with your taxes and where your money goes, like that is a huge program that people could take it, in theory, could take advantage of. So with that, not even going to get to the pitfalls of the new child credit.
Oh, thank God.
Yeah.
Let's get the markets.
Yeah, let's do this. Let's take a look here real quick. We'll just look at markets, and you can see as we're talking here now, look, it's Tuesday. It's not Friday, but here, my friends, is a 618 retracement on a 5-minute chart. And this level is probably going to act like a magnet, and that's the NQs right here. That's the S&Ps right there. Probably going to act as a magnet for the markets, and you need to figure out market direction. You need to decisively start really making progress to the upside towards a 786 retracement or break down below. And like, well, Tim, what are those retracements off of? An hourly chart. I went through the whole litany of why I choose hourly last week. I don't want to do that. But Hunter of Sherwood Forest. St. Augustine Forest, Hunter of Northwest Florida fame, the most famous stock.
Northwest
of Pensacola, northeast.
There you go.
Northeast.
Tim, the pilot's a little confused on direction.
I only lived in the Northwest. I lived in Pensacola. By the way, that was my first test of the Central Time Zone, which I have deemed the Central Time Zone as the best of all the time zones. Like, we get 4 choices in this country, and the Central is the best. When I lived in San Diego, it was Pacific. Alex, what are you on right now? Like Pacific, or did Alex just fall off his chair?
He actually just got up to grab a sheet.
I was grabbing if he's fair. Mountain Standard.
Mountain Standard, not a good time zone. It's the worst. Mountain Standard is the worst of all the time zones. Because
what are you talking about? We don't have to change our clocks.
You're different than everybody else. That doesn't make you an individual. It makes you different. It makes it tough for everyone.
Well, we always knew Alex was different.
Well, he's Guns Koutoudis. Guns Koutoudis, the lone mountain time zone ranger. Can you have
time has no meaning to Guns
mountain
Koutoudis.
time zone ranger? I've got nicknames for Alex now. Alex with this 6-shooter in a mountain time zone.
Get back to Sweetums.
That's right. So 1 second though. Pacific is the worst. I felt so disjointed in Pacific, and here's why. You should know this, Pacific time zoners, Uncle Tony especially. Like, the markets, like the market news. I like to start doing my market analysis pretty early in the morning. Like, the Remster's up 4:35
So
o'clock.
Pacific is like get up at 1.
It's exactly it. That's a problem for Timmy. And so it's like, wow, you're just up early trying to do all this. And then, because the market's open at 6 a.m., right?
Yeah,
well, Tim, get up at 5 and it'll be fine. But you've missed, like, there's a morning cycle. Like, there's a morning news cycle that you kind of got to get warmed up for. And and just to figure out what the hell's going on. And I need more than an hour. I'm not going to lie to you.
Listen, we got to be careful because we've got lots of clients in California or on the Pacific Coast, and I'll get to work. I'll start doing my day. Oh, I got to call, whoever, and realize
3 hours, 2
I'll
hours.
answer,
2 hours.
hello. Oh, it's 6 in the morning. Sorry.
And then here's another problem. It was football season, so this was not a problem. This was a sleep issue for me. I used to really love watching football. Now I'm a casual observer, but I used to love it. And pregame on NFL Network, I mean, they start that at 7 a.m. Eastern. Well, you work your way backwards. That means pregame starting at 4 a.m.
You can't miss the Cowboys pregame, right, Tim?
I think a lot of people can miss that. I'm not 100% sure, but I'm pretty sure a lot of people can miss that. Or the playoffs a number of years in a row. I'll do the dump for you. So let's see. Hunter.
5 Super Bowls to 1.
Hunter. Oh, hurt feelings. Hunter. By the way, it is hard not to root for Dak Prescott, right? I think he's a good dude, right?
He's a good dude.
Yeah, we like Dak. Everybody likes Dak.
Yeah, I mean, he's even when he was at Mississippi State, when it's well, that's a good dude. And he got drafted. Yeah, and they have a linebacker, I think, on the
guys.
Cowboys.
I want to apologize for helping Tim take a left turn.
That's all right. Hold on. There's a linebacker on the Cowboys.
the Jalen guy?
Which linebacker? Which left turn?
No. Which linebacker? He hurt his knee at Notre Dame, and he rehabbed. The Cowboys drafted him, and he rehabbed it. Is it Jalen?
Yeah, Jalen. Yeah, Jalen. Jalen Smith. I can't remember his last name.
That's a good heart. How do you not root for the? That's what I see. That's what I find myself doing now. I am an Eagles fan, but human interest stories who I'm rooting for now. I'm not so consumed with,
You became a dad and got soft. We got it.
Dude, I was soft long before that. So anyway, Hunter's got some market news from Northeast Florida. Where Tim Tebow is Tim Tebow going to make the Jaguars?
As far as I know, he's still on the roster. Technically, is that what you know, Don? Same thing.
Yeah, it's a 90.
He hadn't been cut. Yeah, I mean, I guess we'll know probably within the next 3 or 4 weeks whether or not he's really going to be on the team. I'm assuming he will be.
Tight ends are a very small part of Urban Meyer's offense, but Urban Meyer likes gimmicks. So having a tight end that can also throw,
it sells
obviously people
tickets,
want to argue with that, but yeah, it sells tickets, and having a tight end that you can do a gimmick who can throw a pass.
He's the number one selling jersey in the league.
Yes, he is.
Yeah, this guy hasn't played it down since I believe he was the Eagles quarterback in 2012. Like he was there for preseason.
I remember that.
That's the last time he played.
He's a good dude. People like him.
Well, no. There's something to be said for this, and a lot of people were complaining on the Twitterverse, right? And they're complaining. Imagine being X, Y, and Z and working your whole life towards this, and this dude just gets offered a position by Urban Meyer. But that's life, right? Yep. That's life. A lot of people jump the line. Like ever go to a club and they've got that velvet rope and you ain't it, and they're letting people in that's life. That's instead of complaining about it, figure out how to be the person let in, right? Figure out how to make that happen. Not easy. I'm pretty sure Tim Tebow's had a lot of strife thrown his way along the way, but kudos to him for there was thought
persevering.
Yeah. I mean, in following your dream, there's a lot to like about that story in that regard. And so anyway, Hunter, that was long way for me to get to. Tell us all the stocks going up the rest of the week. Tell us the stock. No, you just tell us the ones going up. I'm going to have Alex tell us the ones to avoid, and then I'll have Don put a seal of approval on that. Go ahead, Hunter.
Okay. Actually, I'm going to make you wait because I want to go back to where we were talking about people getting shaken out, and is there further downside ahead to get people shaken out? Mm-hmm. So can you pull up SHOP for me, Tim? And this is just one example. I've actually got a few, but we may not need to go through them.
Mm-hmm. Good looking chart.
And so you can see, and I'm going to highlight these dates on my screen so I make sure I got them right. You got 6/21. It tries to break out and kind of doesn't really do it. Ends up coming back in below the previous high of 14.99. And then you've got 7-7, so July 7th, and runs up to 1587, reverses and doesn't look great. And then you've got 7-14, where it tries to run again, ends up failing, reversing pretty ugly. So 3 times within a matter of about 3 weeks that Shopify tried to run and ultimately couldn't do it. And then you get a break of 7-15 and 7-16's lows yesterday, and Shop comes all the way back and undercuts 1400. And lo and behold, it ends up getting back above the 21, getting back above the 8, and then now it's up 3% today. So I think, and there's like CrowdStrike kind of has, excuse me, a similar story. Roku undercut the lows of Thursday and Friday, undercut that 400 level. So I do think there's a lot of these where people probably did get frustrated because it wasn't breaking out like they wanted to, or it was coming in a lot harsher than they expected. So I do think in a lot of these situations with the non-big cap, mega cap tech stocks, growth stocks, I do think there's some areas where people probably got shaken out, and they've come back and gotten back above their moving averages. And this is what Don was talking about when he said leaders were acting well. I mean, Shopify was up yesterday and got back above those moving averages. Shopify was up 2% on a day where the markets were pretty horrible.
And PayPal was like that too. There are a lot of stocks like that.
Yeah,
Right,
Roku, DocuSign. I went over a bunch of them in the video. But so there was pockets of strength, and I talked about this in the video. I'm just going to allude to it one more time because it's interesting. If you were to look at the indices performance in the middle of the day yesterday, right? Like say around 2:00, you look and you're like, oh, the S&P's down 2%. The Russell's getting hammered. Mid caps are getting hammered. The Dow's getting slaughtered. You would not expect ARKK and the IPO ETF to be green, but that's what happened yesterday. And that's indicative of, obviously, there's some money flowing back into these risk-on, smaller type of growth names, not necessarily so much the Amazons and Apples because they didn't have the best day yesterday, but it's just something you want to take notice of because that's not necessarily what I would say is common. It's not what you would expect to be the case on a pretty ugly day in the markets, to see those risk-on, smaller growth stocks showing some strength. So anyways, with all that being said, Tim, I've got some off-the-radar type of stocks that are acting very, very well. So first, we're going to kind of go into the auto industry, but we're not going to talk about Tesla. We're not talking about Ford. We're not talking about NIO. We're talking about Carvana, CVNA, which is only about $5 or $6 off of all-time highs here. And one that came down, undercut the 21 EMA yesterday, held the 300 level, and followed that up today with some really nice strength, up 4%, back above the 21, back above the 8. And now, like I said, only about $5 from previous all-time highs, which is right around the 329 level. So a non tech, it's not Tesla, it's not Roku, but it's a name that's acting very well. And what I was for yesterday was names that undercut the 21 and reclaimed it and closed at the top of the range, and Carvana meets that criteria. And names that showed strength that are still very close to all-time highs, and Carvana meets that criteria as well. There's another name. Go ahead, Tim.
Story in the Journal, New York Times. I think it was New York Times. Sunday. So people are getting, if you've got like a 2018 or newer vehicle, there's stories now floating out that people are getting more than what they paid for their vehicles.
Oh yeah,
used. Like there's a guy who traded in a small business.
Used cars are all
traded in his entire fleet of Chevy pickup Silverados because he was making $3,000 more. I think he traded in 9 or 10 of them. He was making $3,000 more than what he paid for each vehicle.
Yeah,
and the dealerships, not the manufacturers, but the dealerships are seeing huge profits because their margins are so high. They don't have to negotiate anything.
Dan actually, he really might be a damn genius, because the next stock I was going to talk about was AN, Auto Nation, which is a dealership stock that's hitting all-time highs after an earnings gap right here.
So it's interesting. Just real quick, I think you're clearly on to something, but I want to just a little bit more.
That I'm a damn genius. That's
yes. Don't feed that monster, Hunter.
Seriously.
Certainly. We've got Tim, the damn interpreter, and Dan, the damn genius.
Yeah, it's like feeding Oscar the Grouch in here, just giving him more garbage to make him more punchy.
DG, baby, DG.
So here's Carvana, and then a very similar service to Carvana is VRM. Clearly not the leader. Carvana is, but look at the price of Vroom. Vroom is $39. CVNA is $325. And a lot of people will deflect. Like this, it's just human nature. You're going to go to the lower priced unit. And I just keep coming back to this example. Align is the $616 stock, which is you go to the dentist to get your teeth, you get the retainers, for lack of a better
braces, but
they're braces, but they're modular
trays.
Trays. Thank you. Aligned, and then look at SDS, Smile Direct Club, and so many people they'll go, well, Smile Direct Club's less than $10, and Align is $600, but clearly higher. The reason why the higher price
SDC.
Oh, thank you. I'm SD. That's even worse.
Doesn't look much different.
Jesus, even worse. And the reason why you go to that, but the reason why the higher price stuff tends to work has a lot to do with, of course, of how it's run. But
PEs are earned, and so is price.
That's true. And then it's the mutual funds and pension funds, what they want to sink their teeth into. And oftentimes they have so much money to put to work, the higher price works in their favor. So you don't see a lot of splits these days, even though NVIDIA just absolutely did one. What else you got, Hunter? I'm sorry, brother.
Did you pull up the chart of AN?
Oh,
I'm not sure if you did.
Second.
You may have.
Yeah, there you go.
I just wanted to highlight it's making a second day higher high after an earnings gap. This is one of those that just alludes to Dan's point. They're seeing over the last 3 quarters revenue and EPS growth acceleration is pretty significant. Obviously, time will tell how sustainable that is due to how long this inflation with used cars and everything else lasts. But for the time being, I mean, they are killing it, and there's some serious volume on this AN stock. 300% above average yesterday, probably on pace for around 200% or so above average volume today. And then lastly, I guess this is another car type stock to a degree, but CPRT, an off the radar type of name, old Copart.
Yep.
I mean, and really what stuck out to me with this one is while everything was getting hit yesterday, and even a lot of the growth stocks that ended up coming back, Copart never broke the 8-day. I mean, it was just down a tiny little bit yesterday. It's up almost 3% today, but this one broke out to new highs on like the 19th, I believe, the 21st, excuse me, and has not closed below the 8-day since that time. So that's right around 130. Now you're 10% higher here at 143. It's been a really nice, strong, contained move higher. There hasn't been a ton of volatility. Like I said, it hasn't closed below the 8 and hasn't really broken the 8-day since 621. So another name that showed strength amidst the sell-off yesterday. And lastly, Generac, GNRC, another name that, it's not the flashy Tesla, it's not your Amazon, but this thing is an absolute monster. Bounced off the 21 beautifully yesterday and is just sitting slightly above the 8-day exponential here. Very close to all-time highs, only about 10 or 15 bucks off of the previous highs. So some off-the-radar names that are really strong, and all of these at or near all-time highs too.
Really good stuff. And think about that, Danny. To not only close the gap, like when you drive a car off the lot, I believe it depreciates like 30 or 40%. The typical depreciation period. Not only are you closing the gap on depreciation, not just to break even on a vehicle, to make money on the trade-in.
Yeah.
What a crazy time we're living in.
Yep.
Amazing.
It's like I saw, I mean, I don't know how, and please don't quote the statistic, but it was like a used Toyota Corolla was up 123% in value year to date. I can't remember what year this specific thing was, but I mean, used Toyota Corolla 123% more valuable now than it was 6-7 months ago.
And let's remember though, a lot of this is a supply squeeze. It's like the price of oil.
Yeah.
When the Straits of Hormuz gets closed down, they have no chips for the new cars. They can't. There's such a used car shortage that the used cars have just gone skyrocketed. But the chip makers are on 3 shifts a day. They're working 24 hours around the clock to bring more chips online. So whenever the chips catch up, 3 months, 6 months, 9 months, the used car prices most likely will come down.
So you're saying whenever or however the chips may fall?
I'm saying the used car prices will ease. If you're trying to sell a car, do it.
Whoosh. It's not fair some days.
It's good. I liked it.
Guns Koutoudis, what you got, brother?
So I'm a product of my environment, and Don has gotten me hooked on ETFs and creating good habits and practicing of digging through ETFs and finding stocks. And XLV is an ETF you can pull up, and within that XLV ETF, which is the healthcare ETF, I did find TMO a few weeks back. That's a leading name within that ETF. Another ETF that I'm looking at is VNQ or XLRE, which is a real estate holdings. And within that ETF, I spotted AMT, American Tower.
Mm-hmm.
And
that's a good read.
So this is a good practice that you can find leading stocks, and I attribute this completely to Don having me do this. I don't own AMT, but I'm watching that one for a pullback. Maybe this is a different way to find leading stocks, because if you notice AMT and TMO, I don't hear anybody talking about it from at least the group of community that people I'm in. I don't hear anybody on Twitter. CNBC haven't mentioned it. And these are names that funds own big portions of. Like if you pull it up on MarketSmith,
it's got a big dividend, right?
That's what it is.
Yeah, it does. Well,
Yeah,
AMT is about
major
2% dividend.
Yeah.
But
I don't usually
3,000
buy
funds
stocks.
own it, to your point, Alex.
I don't buy stocks for dividends. Because
No, I know that. I know
Yeah.
that. I'm saying the fund ownership, a lot of that is attributable to income funds wanting to own it, not
Right.
growth.
And that's a good point. Another one within that VNQ, which is the Vanguard Real Estate, is CCI, Crown Castle. That trades a little bit more like a growth stock, and it's just trending higher. These are like locked type moves right now in this rally that we're having. If you can spot particular sectors or groups that are really strong, your probability of your stock going up is so much better than if you buy something that's in a downtrending sector, right? And then you try to buy a stock that's breaking out to new highs, your probability of success is a lot lower. So try to find groups or sectors that are very strong. And these are two that I think everyone, our viewers, should put on their watch list.
Okay. Is that all you got, brother?
That's it.
That's it. All right. Let's go to Don.
Oh, wait. Actually, no, I'm sorry. I have one thing down. I'm sorry.
Go ahead.
This past week when leaders like Roku were pulling in, something to note is the volume on the down days was kind of light and dry. You can't see it on that chart, but on the up days, the bars, if you were to pull it up on a MarketSmith, let's say, blue is the buy is the days that the stock was up. The blue bars are engulfing the red bars, which are the down days. That is a sign that institutions are probably stepping in on the up days. That's a good sign for a leading stock. That's it for me today.
All right, Don, what you got?
To Alex's point, compare the volume when Roku was selling off in late February and early March to this recent pullback that it had. That'll jump out at you about how much distribution was taking place. This morning, my son texted me. All of his friends were talking about buying Boeing, and after looking at the chart, my response to him was, "You need to get better friends."
We're smarter friends anyway.
I've told these kids over the last 4 years, these friends of his, they say youth is wasted on the young. I've told every one of them to get How to Make Money in Stocks by William O'Neill. And I told them, tell your friends to bring up charts of PayPal, DocuSign, Net, Lulu, InMode, and then bring up a chart of Boeing, and then sing to the Sesame Street song, one of these things is not like the others. Leading stocks lead. Lagging stocks, like William O'Neill said, it's the equivalent of something that's on the clearance rack at the clothing store because it's not selling. Boeing is not selling right now. Everybody wants to dive into the dumpster and buy the thing that's beaten down without understanding the concepts of overhead supply. Everybody that buys Boeing is going to be met on the upside by somebody that bought it on the way down and wants to get out by breaking even. It's just a fundamental lesson about what's working and what's not working that may never come back to its previous glory. And that brings me to the dirty 30 list. I started out after the harsh sell-off in February and March to track leading stocks that pulled approximately 30% off of their highs to see which ones were going to be the new leaders in the next leg up. And over half of these stocks are still 40+% off of their highs. William O'Neill has said multiple times that stocks that lead one bull market, half of them will not even be a factor in the next bull market. And that's what we're seeing right now. We're seeing the cream rise back to the top. We're seeing the laggards stay down at the bottom. And the worst thing you can do is make up a reason to hold a stock that is counter to the price action that you're seeing. So one of the first stocks that made new highs after this recovery off of the growth sell-off from February and March was Dynatrace, DT. And it had a very nice pullback and bounced off the 21 over the last couple of days. And that's something that we added to the Growtection portfolio today. Following up with what the guys spoke about and what we discussed yesterday, leading stocks really have over the to a smaller extent on Friday, but to a big extent on Monday, and certainly right out of the gate Tuesday morning, they did better than the indexes. They did better than the average stock, and it looked like money was flowing into them. And that's what makes us decide whether or not we're going to put money into the market or whether we're going to pull money out. We got stopped on partial positions last week. We came into the week still with an adjusted beta about 1, which is the equivalent of a full market exposure, and got stopped on SSO yesterday when it broke below the 50-day moving average briefly, but added and replaced it with QLD when QLD held the 21-day. And then we added to DocuSign and Net and bought DT over the last couple of days. And this is just based on what the market is telling us. It's not based on our opinion about these stocks, because we'll sell them if they're not doing what we want them to do. But right now they are, and until we get information contrary to that, we are our beta is higher than 1, which means we've got more than the equivalent of being fully exposed to the S&P 500. And that's just based on market feedback. We're getting if this is a dead cat bounce, and it could be, we don't argue. We just observe, interpret, and react. And our observation is that leading stocks are acting great. Our interpretation is that that's good for the market and for the types of stocks that we traffic in. And our reaction was to add money to them. And until we get evidence to the contrary, that's where we stand.
Good stuff. Good stuff. Is that all you have, Don?
Hey, Tim.
Yo, go ahead. Hunter, what's up?
I kind of have a point to make that's in relation to something Alex just said, and then kind of what Don just went through here. And first, to his point about DocuSign, it's one we added to yesterday. That one showed strength really before any of the others did. That was by and large the strongest, and then you see it's up 5% or so today, making new all-time highs. So really nice follow through in that capacity. But on the flip side of what Alex said, with the volume on Roku as it ran up to 460 was very impressive, and then the volume to the downside has been relatively light, which is what you want to see in a strong stock in an uptrend, right? The flip side of that is something like XME or XOP. And I just want to highlight that a lot of these names that really got sold off yesterday, they're bouncing today. But when I look at XOP or XME, over the last month or so, there's a lot more really high volume days where the ETF or the stocks within that ETF were down significantly. And then today it's rallying on lighter volume. So my only point on a lot of these value type plays, whether it's industrials, metals and mining, oil and gas, I would be cautious on these names because these names really got hit hard. A lot of them got hit very hard on above average volume yesterday. I mean, Matador was down 10%. It's an oil and gas company. Fang was down 7%. And, you know, they're rallying today. It's kind of like the Boeing conversation. Yeah, they're bouncing after they got sold really hard, but they're not acting.
Did we just lose Hunter?
Yeah,
Still running into overhead resistance. So I would wait and let these sectors or these companies prove you wrong, and start to see some above average volume to the upside. Start to see some of these ETFs and these stocks push through resistance, because right now they're not doing that. They're running into resistance at the overhead 8, the overhead 21. You know, it's just the momentum is not in their favor. And oil and gas was kind of the last commodity, sector standing. And that has really fallen apart. You can look at XOP, you can look at XLE, you can look at a lot of the stocks within those groups. It's really kind of fallen apart and went the way of lumber, industrials, metals, and mining as well. So that's my only comment, is just be cautious with some of these sectors that are bouncing today.
I think what you're also saying is let stocks tell you what the leadership is. This economy or this market in 2021 is narrative driven, and the people telling you the narrative don't necessarily have your best interest at heart. And when I think about what Hunter is saying there and what Don and Alex were alluding to, we've covered it enough times. There's just been this rolling. I mean, look at when Caterpillar peaked. Caterpillar peaked back in early June. Deere peaked in early May or late May. Like, these aren't the leading groups. These stocks kind of have something has changed in the economy. Whether or not we're going to continue down the expansionary road is something I don't know, is yet to be proven. And the stocks that are working right now, the Rokus, the DocUs is a kind of a clue here. Like, are we all going to go digital signature again? We're no more in-person signatures. That lasted literally 30 days of a reopening. So real interesting. Danny, take us home, and then I've got one more thing.
Well, I think Don said it right. Observe, interpret, react. Folks, listen.
Stop, drop, and roll. Do it again. Observe, interpret, react.
Yeah.
There you go.
All right, folks. Listen, if you like what you heard, please tell a friend, tell a neighbor. Just send them to revereasset.com. We won't spam them. We won't reach out to them in any way. It's up to them to reach out to us if they want a complimentary portfolio review or they just have some questions. You can email any of us at dan@revereasset.com, Don at Revere Asset, Tim at Revere Asset, Hunter or Alex at Revere Asset. You can also call us old school at 855-REAL-WEALTH.
I think what I drop sometimes out of my scans is the dollar. And here is a daily chart of the dollar. And the dollar, the dollar yesterday was up. And the dollar's up again today. I'm not getting a signal right now that dollar up, dollar down is good for markets. And I think that's the nature right now. Like, there's just no clear... There's not one piece of information you can say, because it was, hey, dollar going lower, markets
pretty well correlated. Now it's not.
Yeah, dollar going lower, markets are great. Dollar going higher, it's good for some stocks, not good for some others. I don't know how much the Dixie here is going to give you, and I wonder about bonds. Like if you look at TLT,
it's the same thing. The correlation's fallen apart a little bit over the last week or so.
Mm-hmm. And there's like this TLT here. You would think at the third ATR has it peaked again, and that means rates, like TLT is down 1% today. Okay, so that means rates are up, and rates up. Does that mean where it's good for markets? It's good for stocks. Is that what we're saying here? And if rates come down, which means bond prices are higher, is that bad for stocks? And I think we've got 3 more trading days left of this week, but that's what I'm thinking I'm going to be watching.
I think the next big market driver is going to be earnings, or the interpretation of earnings.
I don't know about
100%.
How they feel about that.
I don't.
There's that's what they're going to focus. Well, that and possibly the COVID narrative.
I think somebody always knows. I think it's rates, and the rates are going to be set by probably the COVID narrative, right?
Well, COVID narrative, if COVID heats up, that would mean rates would get soft. But I think the Fed's going to keep rates down anyway. I don't think they have a choice.
Good spot.
How would they be at this level now? There's not enough buyers in the real market to keep rates this low. Sorry, this is Fed driven.
If rates up is good for the markets, but then if rates up, yesterday rates were down.
Well, this is a 1 day over.
It's a 1 day, right? But just parse it for a second here, and then we'll end it. If rates up, meaning the expansion is back on, is good, then we need less Fed bond buying.
Oh, I agree.
In theory,
I agree.
And then now you've got a taper problem.
Listen. Fed created this problem to begin with. But now what are they going to do? I mean, they created the problem, and now they're trying to fix it.
Yeah, it's going to be interesting to see how we move forward.
All right, folks. We'll talk to you next week on Your Money.